Wow, I mean, follow that, hey? First and foremost, thank you so much for inviting us over today to talk about this banking fintech space. And I'll spend a little bit of time about just introducing my panelists in a minute as well. But to start off with, we're here to, I suppose, just slightly different type of a panel, open up the conversation into banking fintechs a little bit differently to what we've used to. So we're not here so much talking right now about partnerships, because that's what we tend to do, right? We have these. Like every single conference has got at least 2 panels, typically on the main stage now, used to be the fringe, but they're on the main stage now, right? And we bring in the fintech, and we bring in the banks, and we talk about those partnerships. We talk about when banks have bought something from the fintechs, right? Maybe it's technology, maybe it's even something else. And we talk about it from that sort of context. So today we've been asked to come in here to talk about something a little bit different, which is what happens if we actually open up our rails for those fintechs? What if we do partnerships and collaboration a little bit differently? So my name is Jenny, and I run the part of Barclays FIG in a corporate investment bank that banks fintechs, particularly in the UK. I also have a secondary role, which is to sponsor the appetite that we have for the sector pretty much globally. So I'm very much used to being on a hot sheet and answering all the questions all the time. So it's a slightly curious position for me to be able to ask the questions. So without further ado, my fellow panelists, so first and foremost, we've got Graham over here, so Graham Warner. Graham is actually quite fresh in Barclays, so currently heads up our International Corporate Bank Americas business. Welcome, Graham. And Graham, you've been in Barclays for about 4 months now.
4 months, yeah.
4 months, and previously 13 years or so in Deutsche Bank running their America's cash management business, and then also Citigroup in various positions in there. So we'll hear about Graham in a minute. And then we have the fintech, Mark Letson. So Mark, you are the Chief Operating Officer of Currency Cloud.
Yep.
And welcome to you too.
Thank you very much.
I think we saw your dress code earlier on the previous slide.
Yeah, I came...
You know, that moment we all gave a look and went, whoa, it's talking about Mark.
Yeah. I came cliched.
So we saw that. So Mark, Currency Cloud specializes in cross-border payments and payments generally speaking. You're not exactly new, because you've been operating for 10 years, right? Which in a fintech world is a long time. A lot of people in the audience that 10 years ago probably looked at people like Currency Cloud and wondered, what kind of a mythical beast is it? You know, can I stroke it, or will it fly away, or will it bite me? But here you are, 75 billion transactions later, something like that.
Yeah. Just over 100 billion that we've actually transferred across borders, and we transfer close to 1 million transactions a month now. So.
That's it, and you can reach 180 countries, right?
Yeah, I think we reach 180 countries. We do that in various different ways, either via Swift itself or more how we like to go out there. So where we try and differentiate ourselves is by connecting to those local payment schemes and enabling a more seamless approach to the payments.
That's super. So I can hear my microphone is getting louder and louder, and Mark's is getting quieter and quieter. So I don't know if that. I'm loud anyway, so you don't need to whack me up. So just trying to adjust Mark's mic. So whilst they do, I will ask Mark maybe the first question, and that's going to come. And I have to cheat on this one because it says in Currency Cloud's own words that what Currency Cloud is reimagining the way money flows to create better tomorrow for all. So why don't you unpick that a little bit for the audience? What is it that you actually do? Who are your customers?
Yep.
How do you go about serving them? And then making this reimagining the money flows to create better tomorrow for all happen?
Yeah, okay, so I think the starting point, so Currency Cloud itself is an embedded financial services business. There's a lot of buzzwords in that, but ultimately what it means is generally we're invisible in the background, so we are a B to B to X model. And what we do and some of the things that's really enabled us to grow is we package up the economic barriers to international payments, such as license, platform, and banking network, and provide those to other businesses so they can get to market quickly with a product that is needed for their customer group and their target market. when we talk about reimagining the way money flows around the world, the way it's flowed around the world over the years has been via, I mean, we're at Cybos, right? So it has been via SWIFT, an intermediary corresponding banking network. Now, the challenge when you start to layer in different providers in the process is it adds time, it adds cost, and complexity as well. So the way we are trying to do that is to, as I say earlier, connect all the local banking networks together and actually create two local payments, one at one end, one at the other, as opposed to it going through that network, and we're the messaging platform in the middle. Why are we looking to do that? The main reason is when you look at people sending money around the world, no one's doing that just for fun. Nobody is waking up in the morning and go, do you know what, I'm going to send some money to the US and I'm going to give a little bit of it away along the way. They're doing something else. What they're doing is, they're supporting their family back home. They might be buying, going up the chain in terms of value, they might be buying a holiday home where they're going to go and create memories with their family. They might be running a small business where, they're trying to eke out margins so that they can afford to pay the 50 people that are working for them. And those things are quite emotive. And so when your international payment that you're sending goes out along the way and what you sent doesn't get there because someone took fees along the way and it took 4 days to get there, that's quite a stressful experience. And so what we're trying to do is stitch those together, those real-time local payment schemes, so we can make instant, real-time international payments and remove the time, the cost, and the stress from the process for them. So when growing up, when I was younger, growing up, I didn't think when I was sat in my bedroom looking at the pictures of cars and women on my wall that what I would say is international payments is exciting, but actually it is. I enjoy it, and it's actually quite a moral product. Yeah, with friends now, and it's actually quite a moral product as well when you think of it that way. So, yeah, that's what we're trying to do.
So you do work with banks, right?
Yes.
And you talked about that kind of working with. So just give a bit of an idea, though. What does that look like? How many banks? I know many of them might be in the audience and here, but what kind of banks do you look like, and what is it that you actually look from a bank then?
Yep. Okay. So we bank with around about 15 banks globally at this point in time. That will expand over time. I was talking earlier saying we don't necessarily look for a bank with a global reach. Otherwise, all we're doing is just packaging a product and putting our brand on the front of it. What we try and do is find the best in class in terms of FX, in terms of local receipts in, virtual account capability, and payments out. And we try and stitch those together. So we do the hard work behind it so that when people come and pick up our product, they get to market, they prove their concept, that they then don't go, some smart chief operating officer goes, oh, I can do that better. Actually, when they try and do it, they can't stitch something better together, so that we create that simplicity on the complexity that sits behind it. What do we look for in a banking partner? Well, I think the last word I use there is pertinent. It's that partnership. It's that open conversation. There's things that we look for in terms of their capabilities, obviously. We want someone who is an API native. We don't want there to be lots of manual processing in the back end. My goal is 0 time, 0 cost, and I can't get that if there's people in the way, so to speak. So we look for those kind of capabilities, real-time banking capability in terms of the payments. But really what we're looking for is that open and honest dialogue about the conversation of what we're doing that's right and what we're doing that's wrong as well, because as we all know, AML as an example is the big elephant in the room here. When you're onboarding with a bank and you're doing international payments, and it's a risk-based approach, and you're never going to get it 100% right all the time. So having that two-way dialogue where the conversation is, I've got something going on here. Come and talk to us about it. Explain your thinking, and both ways, right? Us saying, "Oh, you've said no to this. Let's talk about it and understand why." So those are the things that we look for in our banking partners.
That's super. So I'm going to bring Graham in now from a miss. So can we hear it from a bank's point of view then? So we do talk about the collaboration, right, with fintechs and all that stuff. So from a bank's point of view and what you've experienced, what then works and what doesn't work?
Yeah, so 10 years ago, we were all sitting there frightened, right? It was David versus Goliath, and the goal was how do we stop fintechs from eating our lunch, right? And some people are still in that mindset, and I think we have to evolve, and we heard it in the last session quite well, shifting to understand how we can together solve problems, right? Change is excruciatingly quick compared to what we were used to 30 years ago, right? So what I'm excited joining Barclays is that the approach is how do we partner, right? How do we have that clear understanding of the ecosystem, and how do we play in a piece of it, and how do our partners within fintech, so open arms versus trying to block them out, right? With this change afoot, we're not gonna be able to solve all those problems, right? We have superpowers, they have superpowers, right? They're more agile. They can fill in blank spots. They can take a piece of the value chain and really transform it, while we have reach, capital, clients, trust, and we can be the bridge between the regulators and fintechs. So the question is, how do we be part of that change versus blocking it, right? Because again, we don't want to be sitting on that beach as that tsunami crests over us. But it's not easy, right? And Mark's talking about financial crime. That's always a challenge, right? We have our risk appetite, and it's clear, and we can't violate it. But we need to partner with the fintech to understand what are you doing, what can we do to manage that risk appropriately? And that back and forth must happen versus a no, right? Sometimes it comes to the point where we are at loggerheads, and that's understandable. But that constant dialogue has to happen. And also you have to, it's very seductive to treat fintechs like a bank or a tech company or a consumer company. Just slide it into one of these markets that we already have traditionally banked for generations. It's not that. So you have to create an organization from coverage, product, ops, control partners, front to back, that are aligned to manage this, or else get out of it.
Yeah.
You're going to cause problems and hurt the market, and ultimately hurt your shareholders.
We talk a lot about actually being quick and what's the changes come and it hasn't come quickly, but actually a bit like currency, like we've been doing this for well over 10 years. Well over 10 years we've been industry specialists. I completely get what you mean, because it takes a bit of it takes guts, but then it takes a lot of hard work as well to kind of build it, and it's not an overnight thing, is it?
And I think one space that I think we can do quite well is bridge fintechs to the greater banking / regulatory sphere, right? This is great. We're bringing them into the tent, right? This is what we need to do. Well done. Keeping them out is just going to make it all more painful for our clients, the industry, innovation. So I would ask you all to do more of this.
So it's great when it works, right? But they're looking there. Maybe there are a few institutions out there who've said no to you.
Yep.
Right? Just kind of curious to open up a little bit for the audience. Why do you think that is? Do you think they've taken enough time to understand you? Do you think some of it is completely justified? Do you think there's maybe a little bit of an unjustified sort of fear element coming to it as well?
I think there's a couple of different aspects to that, right? And actually, really interestingly, some of them have been as Currency Cloud recently got acquired by Visa, and it's really interesting.
Just shy of $1 billion transaction, right? In dollars?
Yeah, billion, just shy of $1 billion. But it was really interesting to see banks that had regularly been saying no to us suddenly change their appetite to want to work with us, right? So, and I think there's two different components there which touch on why perhaps that they're not keen to. And the first one is we talk FinCrime. You can't get away from it. An embedded financial service business where you're a further layer away from the transaction is inherently high risk, and I get that, and we get that as an industry as well. We understand that, and the reward that you get from us compared to the risk of the fines that you get is probably not big enough to help people step over that hurdle. And there's also, I think there's a mindset that that perhaps the fintechs are a bit more loose around compliance, right? And that may be true, but the way I look at it is, you know, with the compliance side of things is, is anyone here a Formula One fan? Okay. It was really, and it's quite interesting because I think there's a really interesting parallel between the industry and the sport, right? Because the sport's probably one of the most regulated sports in the world, and you know, sometimes they get it right, sometimes they get it wrong. And you go out and you say, okay, what's compliance job in that team? And it depends. If you get a room full of compliance people, quite often it's like, you know, to make sure they follow the rules, etc. And it's actually not that. What it is everyone's job on a Formula One team is to win the championship. Everyone's job. Now, you don't win the championship by being overly compliant. But you also don't win the championship if you disregard all the rules, because your driver ends up dead, you know, or you end up disqualified from races so you don't get points. And so it's that piece of how, you know, I think there's that piece where fintechs seem to be a bit more reckless, but actually what they're doing is trying to push the boundaries to make sure that you're still safe, but you're within the rules. And I think sometimes those banking partners don't necessarily see that side of it, that's what you're trying to do. You're just trying to kind of help create a better, more seamless experience for customers where it should be.
Right.
And so I think that is where sometimes the banks struggle to come on that journey, or even entertain coming on that journey. And so that combined with the high level of risk in terms of the fines, and then usually the very thin balance sheets that sit behind it, just make it look like a very hot potato.
So I saw Todd earlier had this little sort of tile up talking about also leveling the regulation, and it kept kind of popping in that. So maybe there's an element there as well. So we could have see, well, it's a slightly different kind of a playing field, you know. So you must be doing something that we're not allowed to do, right?
Yep.
To engage, right?
Yeah.
Isn't necessarily the case, but it's just a sort of a perception thing.
Yeah, and it comes back to that point of you know, kind of looking at the edges of the regulation and looking at what the regulation says, what it doesn't say. And how you can work within those confines, because you know, ultimately we're all trying to do the right thing by the customer. And if you take too many risks and step outside that, you're not necessarily doing the right thing for the customer. So I think there is that as well of you know, the disparity in the regulation for sure.
Yeah, and we spend a lot of time talking to government officials, central bankers, and there's always that tricky. There's regulatory arbitrage to a certain extent.
Yeah.
Everyone wants the fintech to burgeon and to be in their city, in their country, and the tax dollars, the jobs, et cetera. They also don't want to stymie innovation. So how do you keep that balance is very tricky. And we've used banks as sort of the implementer or the governor to ensure controls. I think in the future that has to be corrected.
Yeah.
We need to. It's, again, we were talking about before, risk management is a team sport, right?
Yep.
You know, correspondent banking, it's a bunch of banks, a bunch of fintechs, a bunch of people around the world that are all working together to move value, right? So I think we have to figure out how to do that. And bringing the fintech into that conversation with the regulators, with banks, I don't see that happening enough.
I agree with you 100% there, and I'll a very, very quick analogy where I think it's played out in two different ways, right? And so 2008 financial crisis, right? Absolute nightmare. European and UK regulator was much more forward thinking there and tried to basically went, big banks have had it too good for too long. We need to bring in innovation, we need to bring in competition. And they opened up the market. And they created regulation around it. Probably need to go a bit further, right?
Right.
But
Sandboxes, et cetera.
Yeah, sandboxes, et cetera. And they created innovation and created a really burgeoning fintech environment. And you know, banks did start to work together a bit more, and that was good. You look at the opposite of that, which was down in Australia, where they went, do you know what? Big banks are good for the economy. We need big banks. We're gonna make the banks consolidate down into fewer banks. And actually, we're not going to encourage innovation. We're not going to open the door of where people can play. And what you see down in Australia compared to the UK is banks are constantly de-risking in the fintech space, and you sit there as a fintech and you think, how much of that is rightfully saying no, you can't be our customer, and how much of it is going, well, that's going to go after a really nice part of our revenue stream. And so I do think it's right that the regulator needs to play that role in making sure that it is a legitimate business model, a legitimate environment that you're all playing in, so that can bring that comfort together between the frenemy, right? Which is you're our biggest friend, but you're also the existential threat to our business. Whereas if you go, we can't work with you anymore, we don't exist, right? But what the regulator in the UK did was, open up the faster payment scheme, and you can get, as a non-bank provider, you can get a central bank account, and so you help, that helps banks to go, okay, if they can do that, maybe I have to work with them anyway. So.
And we've seen over time, what a fintech is and isn't, right? It's sort of expanded, right? You think about PayPal was a huge force in the early, sort of genesis of fintech, and that just continues to expand, right? So. Do we want to be KYC and Rails at the end of that? Or do we want to continue to play within that exciting space which connects to the client? So I don't want to be part of an industry that's basically at the end of the value chain. There's going to be two of us, right? And we're going to be a commodity. How do we make sure that we can evolve to continue to add value in the space as you guys get pulled into the regulatory sphere more and more? Like, that's something that wakes me up at 2 a.m., right? So I'm still not sure how we do that, but we have to work together.
I think so. Let's come back to that point about kind of, you started talking about sort of pushing up the standards, right? Because this is what was one of the briefing notes for this session. And I think it happens both ways, right?
Yep.
So you mentioned already one, which is kind of the open banking, just suddenly we had a whole bunch of fintechs coming in UK, but Europe more broadly as well. Somewhere, open banking has existed. I mean, I always tell the story. I'm from the Nordics. We don't call it open banking, but it was there when I moved into UK more than 21 years ago. So, it's not, again, not new technology. It's just how it's been rebadged and branded. But that aside, so where else have you seen sort of fintechs pushing up, I suppose, the industry, forcing the more traditional banking industry into new places and experience and do new things, right?
I mean, just from a Swift point of view, Swift GPI, right?
Yeah.
Would that have happened without fintechs pushing us to do that? I don't think it would.
All right, we should ask them.
So it's
would it
ups our
happened?
game.
Like, would have you guys done it if the fintechs hadn't showed up and said, you know what, we need to get this into more transparent space? I don't know. Maybe that's a question to leave with everybody to think about. But yeah, it's a good one. And there's been others as well, right?
I think a good portion of it is around that customer experience side, and that's what the GPI is the experience. And I think you see the neobanks coming in, and they drive a better end user experience in there as well. I also think as well around, because it's not just the fintech, it's technology just in general as well, and it's how on the KYCing side of things, how you kind of improve that customer experience there, bringing in that technology as opposed to having to go into a branch and do all that stuff. So
yeah, absolutely. So coming, I suppose, we've kind of generated this kind of pushing up the standards then the other way, I suppose. Yeah. So we've been involved in the sector for a while. Like I said, internally I get asked a lot of questions, but when I'm facing to my client community, I'm asking them a lot of questions, right? I'm asking them questions about where their standards are. I'm expecting a lot from them, and I'm expecting that transparent conversation all the time. And it's not just once a year sort of occurrence, right? It's kind of continuous questioning, understanding what is happening to various different models, particularly as companies grow hugely fast. And we do a lot of that sort of due diligence, right? In terms of the compliance, governance, corporate sort of governance side as well, which is a big thing for us. So maybe Graham, coming to you on this one, but what's your kind of a view, and then Mark, yours as well. But in terms of banks, and when they set up these kind of things, when they set up their appetites, like that's where you have to start from. You have to define what you want to do, right, to start off with. How important is it to be global, to be sort of clear about it, or is it better when it's a bit more sort of a fluid? Graham, you start.
I mean, it depends on the bank, right? If you're a global bank, or you're a regional bank, or you're very focused on a niche industry, it's going to be a lot easier if you're very focused, right? But then you don't have a portfolio and you have risk, right? So risk appetites expand and contract with your capability to manage those risks and with events, right? So I think you've got to be quite clear about what that risk appetite is with your key clients and partners and regulators, but it has to be a discussion, not a binary. This is it. We can't talk, because often your risk appetite also has to reflect the controls of the people further down the value chain, right? You have to be able to prove that that's the case, but it can't just be in a vacuum, right? And to get that, you have to have that communication up and down from the regulator to you, down to your clients. Mark, we have this conversation a lot.
No, I absolutely. I mean, I 100% agree, and that's the piece where there's a risk appetite, but the whole point is of a control environment is it's a risk-based approach, and simply saying no to something isn't a risk-based approach, right? So it's kind of I do think it's how. I think it's really important for banks to actually take a global approach and be consistent across markets, etc. Because I find that if they're different in different markets, it's almost like a way in to get leverage, and it starts tweaking and moving. So
in defense of the banks, some regulators are more aggressive than others. But how do you get an overlay that smooths that out a bit for your client?
Yeah, and then, but yeah, that kind of having more of a conversation, to your point, of different entities have different maturity in their control environments, right? And so taking an approach based on, or even taking an approach that's based on those controls, and even taking an approach that would see you trialing something, right? And going and maybe pushing the boundaries around new technologies or new customer groups or new typologies, and I think that's a really interesting area to help each other grow.
And Currency Cloud is much more mature than most fintechs. We spend a lot of time doing that advisory, right? I'm sure you guys do as well, right? How to make sure that your upstream or downstream rather clients have the controls, and often it's educating them and helping them stand that up and giving them sort of a clear path to it that's needed, not just a no and pass.
Yeah, are they willing to come to the party, right? Like we talked a lot about that. So they're more than willing to have a seat with you, have a seat at your table, and actually have that conversation. And I tend to find that in a marketplace, really mostly fintechs want to tell you how good they are on the control side. Like they have a bit of a hangover from that reputation of being sort of the secondary. So those fintechs who they actually want to talk to you about it, they want to showcase, they want to see, hey, I do this very quickly. I think just before we came, absolutely. And we had this little conversation outside before the session, right? Where I think, Graham, you referred to a model as frictionless. And you very quickly went, no, hold on a minute, not a frictionless model, your onboarding model. Maybe share that a little bit, what you meant by that.
Yeah, so when we talk about friction, there's two different areas to when I think about frictionless. Because we're a B2B to X model, there's on the B2B, our frictionless component is how easy it is for someone to pick up our APIs and actually build to them. And then when it's in, our processes are all automated, so all that's nice and easy, and the messaging backwards and forwards. Where there is friction is where we're going out to those clients and running through what their controls are around onboarding customers, and what their organization structure looks like, what their governance structure looks like. So that enhanced due diligence that we do at the front end is definitely friction. We then have beneath that, because we obviously service the retail component as well, and this is where it's where you take your process. The way I describe it when I'm talking to product people and trying to get them to think about it is, we want to look for the indicators of where there should be friction.
Yeah.
So we don't go to every single person and ask them all the same questions, because that one will help. All those questions help us find a criminal. We look for indicators within their transaction, within their behavior, that say, oh, actually, we need to ask more questions. And so it's really how you're more flexible with how you put friction into the process, to make sure that those that don't need to feel the friction don't feel it, but those that do know that you're asking the questions because you know what they're up to. So we'll step away from your business.
That's very good. So I'm going to ask one more question from you guys, just looking into the future, or maybe it is the now, based on that. But then we're going to put a bit of time. I think there was a request to get some questions from the audience as well. So so I'm going to come to audience quickly as well, in case there's some thoughts or questions or challenges this way. But yeah, let's finish off with this kind of where do you see it going from here, right? I mean, point be stating the very, very obvious. I mean, fintechs are here to stay. They're part of that, probably the first tsunami and the next one, right, that we saw earlier. So it's not like you can ignore it, and they are in the ocean, and they're probably on a beach with you already, right? And they're having all their deck chairs laid out to you as well, and they're amongst you everywhere. So, but where's it go from here? What's it look like? Maybe Graham, you start, and then Mark.
I mean, we just had an hour of that, right? Change, right? Change. One thing that we're not great at change, right? We're big, massive organizations, highly regulated, legacy debt, et cetera. But we also forget that many fintechs are trying to get the assets that we take for granted, right? So I think what's going to be the challenge for banks is how do we deal with just the realities of old and sort of arthritic processes and leverage the massive value that we have. I mean, just, the last sort of message of the previous presentation was data is king. How much data do you guys have? In some cases, century plus of data, right? How do we take that and actually use it effectively and partner with folks to transform it into value? So I think change, massive change, and we have to leverage the strengths we have, or else we're going to get swallowed by that tidal wave.
And Mark, from your perspective.
Yeah, from my perspective, it's interesting because you always see fintechs and they're looking at the pools of value that the banks have and try and pick off the nice ripe bits and leave you the difficult stuff to stay behind with. But banks have great, like you said, great assets, great brands, kind of great balance sheets. And so I think how you can get together and partner more to prevent the fintechs eating your lunch, how you can bring them into the fold to give those experience to your customers without them necessarily leaving your brand or your environment and your infrastructure. I think about it for international payments, like I say, we all try and take from the customers, but there isn't a fintech that's come out there and gone, do you know what, actually we'll do this for you guys. You use our rails, we'll sit behind your brand, your customer won't know it's us, but we will improve the process outside of, say, Swift, and we'll bring it in, you'll just be making domestic payments, so it will be the same process for all your payments.
Commoditized approach, right? There's certain things that we don't do well. I mean, cash forecasting, a lot of banks have leveraged fintech. So I think there's an opportunity to find the components that we really dominate and add value and attach the APIs, et cetera, to other elements that can transform into a solution. And I think, BAFT is a great example of a consortium that will allow us to do this, right? Organize and be focused to, marshal ourselves to take on that change.
Definitely. So I think we've got a couple of roaming mics going out there. So we'll get some questions. I think the first question, there's a gentleman here at the front. If we just get it always takes a couple of seconds for the mic to waltz its way around.
Thanks. Is it on? Yeah. So question for Mark. And Mark, I'm with Zions Bank Corporation. We're a regional U.S. bank. You mentioned about the banks that you work with, that you don't necessarily work with the mega banks because, we could just, deliver, we're just kind of rebranding, what their network is. But I'm curious, what have you found about working with sort of that next level down of financial institution? What are the characteristics that you look at with those kinds of banks? And because I wonder, maybe you mentioned you're still having to pick and choose because they don't have, you still need the reach, you still need the product, but is there a kind of an operating model or a willingness to maybe kind of co-innovate, or just talk about that if you could?
Yeah, so with our banking network, what we do, we have a couple of large players that are global that sit across, and Then we go for some more regional ones that might have a better specialism in a certain area. And we do generally find that the smaller banks there feels almost more of an empathy towards each other in terms of we're both smaller, we're both a bit more scrappy in terms of fighting for market share, fighting for position, and there can quite often be some of them can be just much more advanced from a technology point of view, from how easy they are to interact with, easier to get hold of the product people, and so it just feels like you're working with a smaller business that is more kind of aligned to your principles and to your values. But don't get me wrong. I mean, I'm sat in a room sponsored by Barclays, one of my best partners, right?
Thanks for that plug.
And so they absolutely can. Big players can come to the table, but yeah, you find that there can sometimes be we talked about having a more dynamic risk appetite. There can be a more dynamic risk appetite with the smaller regional players as well, is what I find.
There's a gentleman over here. The mic is coming from there.
On the B2B side, can you just define who your ideal customers are? And when you filter your universe, what do you look for as your customer base?
Where the flow is. I mean, it's an easy answer, right? But so I think that we saw a presentation before where it talked about startups, and what they talk about is where the next funding round is, and the way I look at startups are generally you can be a bit of a scavenger at the table of revenue, right? And so I think historically Currency Cloud has had a relatively broad acceptance of clients, albeit, like I said, there's friction in terms of the enhanced due diligence that happens. We're working through how we narrow that focus down at the moment. Like I say, it's where the flow is, so where we can perhaps create a better international payment experience for a regional bank is a good example. So predominantly banks, other wealth techs, other fintechs. Those are the key components, but we'll also do payroll providers and that kind of thing. So the focus is at the moment of how we narrow that capability down. And the reason for that is to make sure that we become kind of inch wide, mile deep, as opposed to mile wide, inch deep, and we're a bit mile wide, inch deep at the moment in terms of the front end offerings that we give those clients.
Gentleman over here.
Yes. Hello. Just a question for you. I'm wondering, what is the world's interest to multiply, all the possibilities to get connected? You have seen that in the past, Swift has been dominant. Other solutions are appearing, and if we multiply all these solutions, I suspect that there will be a cost-related issue. What is your view on that?
So let me just make sure I'm hearing the question right. It's are you talking about the connectivity of all the different providers that we so for example a BAS provider, a payment provider, a cash flow forecasting provider? What do I think of that? I mean, I do genuinely think that. I mean, I look at banks and I think perhaps a real good move forward approach for them would be to take their brand and pick up the best possible component. In the same way we do, we go out and find the best possible banking providers to provide a service in that region, to stitch those, almost become a marketplace, particularly as you start to look at open banking. And it's open banking at the moment, but I think if you can turn it into open finance as opposed to open banking, I do think that is a really interesting way to lead forward. Like I say, you've got great brands and you get the customer attraction, being able to give them the best possible service, particularly in perhaps the more, like, not the core of what you do, but really interesting for your customers and it can add value. I do think that is a way forward. Is definitely a way forward.
Thanks, Mark. So we'll take one more and then we'll call it if there is one more. Otherwise, manage? No. We've got a silent audience, I think, Arlene. So we're going to finish off there, I think. Thank you so much for both of you joining me today. Thank you for BAFT and the audience for having us here today. We really hope that you've got a fantastic rest of the conference. So please join me for thanking great two panelists.
Thanks for inviting us.